Budgeting done. Now let's do my savings transfer so I can start watching some Netflix. Let's take care of my emergency fund. Hey, wait a minute. I reached my 1 year of expenses goal. That wasn't as bad as I thought it would be. I wonder if my savings account is the right place to store my money. It'd be really cool if I could make a little interest. Time to do some research. Research done, and I have found the perfect place for you to store your emergency fund or any short-term savings goals, and that is a money market account. I'm sure you're familiar with checking accounts and savings accounts, but you might not be familiar with a money market account. I'm going to tell you all about them, and I'm going to tell you about CIT Bank and their money market account, which offers returns 6 times higher than the national average on savings accounts. And I want to give a special thanks to CIT Bank for sponsoring this video. I like to think of a money market account as a merger between a checking and a savings account. It is a type of savings account that comes with features like a checking account, such as a debit card. But like a savings account, there is a limit on the amount of transactions you can do per month. Money market accounts are considered safe because a money market account at a bank is insured by the Federal Deposit Insurance Corporation, or the FDIC, while a money market account issued by a credit union is insured by the National Credit Union Association, or NUCA. The great thing about money market accounts is that they do come with higher interest rates than regular savings accounts. But I have to say that at the time of this recording, interest rates are pretty low across the board. You might also see the term money market fund. A money market account is totally different than a money market mutual fund or a money market fund. Money market funds are offered by investment companies or other groups. They are not FDIC insured or NUCA insured, which means that you can possibly lose money investing in a money market fund. You guys know I love looking at both the pros and the cons, so let's look at the pros and the cons of a money market account. The first pro to having a money market account is the higher interest rate. Now, you're not going to make a significant amount of money off of the interest, but if you can get a higher interest rate, then why not go for it? Another pro to having a money market account is that it is easy to access your money. You'll have a debit card that you can use just like you use for your checking account. Another pro to money market accounts is that they are safe places to store large sums of money, as they are FDIC insured. Now let's talk about some of the cons. One con to money market accounts is that some require a high initial opening deposit, or they require you to maintain large balances in order to avoid fees. Another con is because a money market account is a savings account, there is a transaction limit, and this is normally 6 transactions per statement period. This means that you'll be limited on things like online and mobile bank transfers, checks, and debit card transactions, while deposits are normally unlimited. It's worth noting that in 2020, the federal rule that required banks to limit withdrawals and transfers to 6 per month was revised to eliminate the limit. However, some banks still impose this limit or charge fees if you go over a certain amount of transactions. Money market accounts and high-yield savings accounts are very similar. They both offer higher interest rates than regular savings accounts, and their APYs are normally not that different. They both have transaction restrictions, and they both can have higher balance requirements than a regular savings account. The main difference between a money market account and a high-yield savings account is how you can access your money. With a money market account, you have the ability to use a debit card or checks, and this is not normally something you can do with a high-yield savings account. Whether you go with a money market account or a high-yield savings account will usually depend on the purpose that you're saving the money for and how you want to access your money. Now that you know exactly what a money market account is, let's talk about some of the reasons why you might want to get one. Money market accounts are great for storing your emergency fund. With an emergency fund, your goal is to get 3 to 6 months of expenses, and then maybe take that up to a year or more depending on your financial situation. The purpose of your emergency fund is to have money easily available in case of an emergency. And this could be something like a car repair or a medical bill, or even something as serious as you losing your job. So in essence, your emergency fund can grow to be a large sum of money, and you need to be able to access that sum of money immediately when you need it. A money market account definitely meets the needs of this type of savings goal. If you've already saved up 3 to 6 months of expenses, or you're working on that 1 year or greater, then you already have a large sum of money saved up. And the initial balance to open a money market account or minimum balance requirements will be no problem for you. And there also may be perks like the one I'm going to tell you about from CIT Bank a little later in this video, so make sure you keep watching until the end. No matter where you are in your emergency fund journey, a money market account will give you a safe place to store your money and allow you to take advantage of a higher APY. And in case of an emergency, you will have quick access to your money via a debit card. So with a money market account, you get the comfort of knowing that your emergency fund is safe, earning interest, and you can access it quickly when you need it. Money market accounts are also great for other short-term savings goals like saving for a vacation, a wedding, or doing home renovations. In each one of those examples, you benefit from having a place to store a large sum of money because weddings and home renovations, like I'm about to try to do myself, can be expensive. And you'll know that your money is safe and you can access it easily when you need it. CIT Bank is a digital bank that provides a variety of banking solutions. They have an award-winning savings builder account, a new digital e-checking product, a money market account, and a range of CD options. CIT Bank can help you maximize your savings and reach your goals no matter where you are on your savings journey. But let's talk about their money market account. At the time of this recording, their money market account has an APY of 1.55%, and there is a $100 minimum initial deposit. There's no monthly service fees, and they are FDIC insured, and it is easy to access your money, and they also support Zelle. CIT Bank has a special promotion going on right now where they will give you a year of Amazon Prime on them if you deposit $15,000 into your money market account and keep it in your account for 60 days. This is a value of $139, and I don't know about you, but I live by Amazon Prime. To learn more about CIT Bank or to get signed up for your money market account today, all you have to do is click on the link that I provided in the description. So what do you think? Do you think a money market account will fit into your savings strategy? If so, what would you use it for? Leave a comment and let's talk about it. And if you want to know the one thing that will take your budgeting to the next level, then watch this video right here.